Ladies and gentlemen, for the first time in 4 years, Bitcoin has seen a halving. The halving has occurred, and we saw basically nothing in terms of price action from that halving, which, to be honest, is not surprising at all. If we look back in prior cycles, each of the yellow lines here on the screen represents the Bitcoin halvings. In 2012, we saw, guess what? Nothing short-term upon the halving. It's a macro event. We saw the exact same thing in 2016. Absolutely no effect on the short-term price action. Macro event led to a bull market. 2020, same thing. Very, very little effect on the short-term price action. We did actually see the halving, I think, on the 15th, so literally nothing happened at all. We just saw regular chop occurring. And then this year, of course, today, we saw our halving, and the price action of a short-term has been not affected at all, really. So the halving is a non-event. Historically, we were holding out this time a little bit. I said in yesterday's video and the day before that I'm going to be taking a neutral stance in the market, not going to be moving much, not going to be buying or selling, because just in case the halving actually led to something this time. But for the fourth time in a row, we're 4 for 4 here. The halving just doesn't do anything in the short term. And I think one of the reasons for that is probably because it's so predictable. People know it's coming. It's not really a event that people react to. Because look, if you know that Toyota's going to release a new car and you want to buy Toyota stock, you're not going to wait for them to release the car. You're going to buy before. You're going to buy when they've announced it and they've planned the date and you know when it's coming. You buy leading up to it, because the markets are always predicting the future, not the present. Okay, they're not a resemblance of the present. They're predicting the future. And since we knew the halving was coming, and we have every single time, it's not really a surprise when it comes. So you see no difference in short-term price action. No one's reacting to it. They've already reacted in the months leading up to it, right? This pump here that we've seen in the last year or so has probably been partially due to the fact that the halving's coming. People have bought in anticipation to the halving. They haven't been reacting to the halving when it's actually occurred, because they knew it was going to happen. Anyway, moving forward, right, because that's useless information now. It did nothing. Doesn't really matter to us anymore. We know that it's macro bullish. We know the halving has historically led to bull markets. We're all good from that front. The macro still looks great on Bitcoin. Now we need to look into other things like short-term price action. You won't be surprised to hear me say that I'm still not looking that positively on a short-term price action for Bitcoin. Although we have done a few things that is quite slightly reassuring. For example, we had this 12-hourly triangle formation on the RSI. We broke back into that triangle. It's pretty much labeled, in my opinion, as irrelevant now. We've now broken below it, retested it once, broke back above it. We're testing it for support again. It's just kind of a line that's holding some degree of prominence, but it's not a major breakdown line anymore. It was originally. In fact, the breakdown from this triangle formation is what dragged us down from around 71k all the way down to 59k. But I think that breakout, for the most part, most of the steam that was going to come for it has probably occurred. Right now, we just need to look at Bitcoin alone, just without the RSI, I believe, because we're looking at a 12-hourly chart. We see we broke down from an ascending wedge, but again, the momentum from that breakdown's probably gone. We can go ahead and remove that wedge from the equation. We just need to look at Bitcoin from a more objective standpoint. What are the horizontal lines doing? Horizontal lines are very important here. 61.1k, or around that price region, is a very important level, because that's where we saw the highest ever monthly candle close in 2021, and also brief resistance in the monthly chart here in 2024. If we go ahead and take that pink level, that 61k level, and apply it to the short-term charts, what we essentially get is a neckline for this entire structure. The entire structure is built up above this pink level, which is the monthly candle macro support zone. So it's very important to know where your support is stemming from. This support level is very, very strong because it's stemming from the monthly candle, and it's stemming from the all-time high in 2021. So it wouldn't be overly surprising if it held, but I mean, we have to look at it from an objective standpoint and just flip the chart around for a second just to get that objectivity. Flip the chart around, what do we see? We see that Bitcoin right here in an inverted chart is in a very bullish structure. We see we've got a rounding bottom here. When you see a rounding bottom, you generally break the neckline and you generally move upwards. We flip the chart back around. That means we're actually bearish on Bitcoin, okay? In terms of this structure. This structure is not looking good. But obviously, we are in a macro bull market. Obviously, we're in a macro upwards trend. We have not actually broken into a downwards trend yet on macro, because if you think about it, right, we've still got the higher lows and higher highs. We've made an equal low here. We've made a lower high. We're not fully in a downwards trend yet. We need to be seeing a lower low to enter a downwards trend properly. So Bitcoin, technically speaking, is not in a bearish trend quite yet. It's testing a very important neckline for support. If it drops that neckline, as I've been saying for weeks, basically, if it breaks 61.3k, we're going to be very, very likely to go down to about 57k level. 57k obviously is our very major macro support zone stemming from the volume profile. We look at the volume profile on the right-hand side of the screen. We see there is a very major spike in the volume profile around 57K. All right, so the next support zone below where we are right now is 57K. 57K is also a very important zone for a couple more reasons. If we're looking at weekly chart RSI, we broke down from an ascending wedge formation on weekly chart RSI. Whereabouts would we be reaching support? Probably around that 57K level. It's hard to verify that, but that's just a speculation. And then we're looking at the BLX, and we can go ahead actually and go to the 2-week chart on the BLX and draw in a very, very important support line stemming all the way back from 2011. Let's go ahead and do that. From this peak from 2011, all the way through to right now, basically, we see a very important support and resistance line that we've tested from the upside and the downside retests time and time again. And right now, that support line is resting at about 57K. So 57K is kind of, I've explained it as a magnet, that it's dragging Bitcoin down towards that level. And Bitcoin right now is just refusing to budge, pretty much. I mean, it's not really moving there. It seems pretty solidly foundation kind of dug in at that 61K zone. Right now, I believe the reason why we've seen this downside price action in the last couple of weeks mostly is because of the macro. And when I say macro, I'm talking about traditional markets. So we look at the S&P 500 and we look at the Bitcoin correlation to the S&P 500 in orange, and we can see that the entire correction here on Bitcoin has pretty much been a direct result of S&P 500 rolling over and forming a similar kind of cup formation with a neckline than Bitcoin is doing. Why has the S&P rolled over a little bit? Well, it's done it because we've seen a change in the expected date of arrival of the rate cuts, okay? Previously speaking, a few weeks ago, our first rate cut, the FOMC, the first ever rate cut that we're going to see, basically decreasing interest rates from the Federal Reserve, was going to occur around June, okay? This June date right here, June 12th. Now it's been pushed back basically to September. Not pushed back, but the expectation is happening in September rather than June. So we've seen a 3-month kind of delay in where we were expecting rates to be cut. And that's led to some differences, some changes, I guess, in the macro environment, which has led the S&P to kind of take a breath here. And Bitcoin's done the same thing. So right now, I would say that Bitcoin's health is kind of a direct indirect reliance of what the S&P does, and obviously predicting the S&P is like bloody tossing a coin into a lake and trying to find it. It's very difficult to predict the S&P because the S&P doesn't move via TA, really. I mean, it moves via TA, it respects certain levels, but it mostly moves via macro. And the thing with macro is you're looking at, Jerome Powell sneezing and rates change the probabilities dramatically. And so how are you going to predict that? It's not really that easy to predict, right? The entire market right now, and I say that quite literally, is predicting the first rate cut to come in September. A few weeks ago, they were predicting the first rate cut to come in June. What changed? Jerome Powell said like 6 words and everything changed, okay? So it's not really something I'm going to confidently predict on. What I can say is that Bitcoin is macro bullish. What I can say is that in order for Bitcoin to be out of danger on these short-term charts, in order for Bitcoin to be out of danger of falling to 57K, which currently is the trajectory, right? That's what it's targeting right now. We need to be getting above 69K. Why do I say 69K? I say 69K because that is the weekly candle level that's very important. If we look at the weekly chart, we look at the 2021 all-time high marked on this wick right here in November. We extend it right across. We can see that 69K is where we saw a rejection on the candle close and then a support bounce, and then a drop right down below it. Upon the break of 69K, we also broke this ascending wedge formation on the RSI. Point being, we need to get back above 69K on a weekly candle in order to get out of the danger zone on Bitcoin in the short term, okay? And you can see that if we get above 69K, what we would actually be forming on Bitcoin is kind of like a W formation, right? We'd be forming a bullish structure, but right now this structure is certainly bearish. So basically, I've said a whole lot of words, and the conclusion is the halving led to nothing. The macro environment has changed slightly, which has led to Bitcoin going down, along with the S&P 500. We don't really know what's going to happen with the S&P, but we do know that Bitcoin is in danger until it gets above 69K. That's the overall conclusion. And I've kind of spit out thousands of words and tossed through 15 different charts to get to that conclusion, but I hope you guys understand the conclusion very thoroughly. Again, we need to get above 69K for Bitcoin to be out of danger. Until we do that, we are still in danger of dropping downwards to a lower level. But overall, the macro is looking very good. We are still macro bullish. When I say macro, I'm talking about long-term charts. We are still macro bullish. But yeah, it's just the short-term threat is still there. The short-term threat of dropping below this neckline is still there. That neckline needs to be watched very, very closely. So again, I'm just coming at you again with not really much conclusive conclusions on Bitcoin. I don't really think the data is there to have any conclusive opinions or any strong definitive opinions. It's just kind of a vague analysis telling you what needs to happen, and if this happens, this will happen. I understand people get annoyed by that, but that's what we're working with right now. And there's no point me sitting here saying I'm ultra bullish or I'm ultra bearish for no reason when I'm actually not. It's just I just don't have particularly strong opinions right now. It's a lot of observation that's going on. There's not much predicting going on. So guys, thanks for watching. Hope you enjoyed. I'll catch you in the next video. Before we end this one though, check out the BitGet and BingX exchanges. Very good exchanges, never been hacked before, very low trading fees. You can get 15% trading fee discounts with my links below, so check them out. And then the bull market sale on the Crypto Academy, become a trader 10-unit course. We're educating people how to trade, teaching people how to trade in their university-style course here. We've got PowerPoints, videos, worksheets, a trading diary pre-planned for you. So check it out if you're interested. All the information's on the website. And then we finally have the VIP group on Telegram with altcoin trading signals being posted 4 to 5 times a week. Direct trading signals with suggested entries, stop losses, take profits, the whole 9 yards. We've got a 77.51% win rate there on Telegram, so check that out. Guys, thanks for watching. Hope you enjoyed. I'll catch you tomorrow.